Good evening, everyone. I have a really important video lesson to talk about today, and it's something that I've been wanting to talk about for a while, but today's market events are kind of forcing it upon me as I took a tough learning lesson today. I took some bad losses today off of very foolish, just silly action things that I let slide by me. That you just can't let your guard down as a day trader, and I want to talk about those things that happen and how we can be sure that they don't happen again. So let's go ahead and dive into what happened today. First, what I want to talk about is our current market state, and I know that anyone who is anyone, is chiming in, giving an opinion about the markets. What are they going to do? Where are they going? Well, I just want to talk about their uncertainty. Okay, no one knows. You know just as well as I do, as well as some financial analyst or your neighbor across the street. No one knows what's happening with these markets, where they're going to be tomorrow, where they're going to be 6 months from now. Okay, the best we can do is make educated guesses, but sometimes that it's not even worth our time, especially as day traders. We're not concerned with where the market's 6 months from now. We need to focus on price action. Okay, and that's what this video lesson is going to be a lot about. I just want to talk about this market uncertainty though, and the trading environment that it has provided. Both longs and shorts are just going through the cycles this year. Okay, if you have a long bias or a short bias, the markets are so flip-floppy that one week they could be incredibly bullish, one week they could be incredibly bearish, and you just might happen to flip your bias at the wrong time, just get crushed. It has been a ruthless market. And then we have seen tons of hedge funds get blown up because of the volatility in the markets recently. And I'm gonna be a little more visual with that and show you what I mean here. The average hedge fund is red on the year and is well underperforming the market. Okay, and the markets are also really struggling this year, actually down on the year. There's a trade war going on. There's threats of interest rate hikes. And then there's also threats of not raising hikes, not raising interest rates. And the reason they wouldn't raise interest rates is because maybe our economy isn't strong enough to handle it. So that's another total fear and uncertainty. We have many people are arguing that we have a plateauing economy. With jobs growth, just really has nowhere else to go. People feeling it's maxed out. Inflation. Wage growth, all sorts of those things. And additionally, it's we have a major lack of market leadership. For the past probably 2 years, tech has just ran the markets, but that has completely changed in recent months. So let me start to give you a little more visuals of what I mean by this, okay? Now, this right here is the Dow Jones Industrial Average, okay, the DJX. And I don't mean to get too elementary with you all, but I just want to explain what that is first of all. Okay, this is what we call an index. It's a price-weighted average of 30 significant stocks traded on the New York Stock Exchange. Okay, so you'll hear people talk about the Dow Jones Industrial Average all the time. Again, I don't mean to get too elementary with you, but I just want to review. This stuff is really important. Okay, the Dow is, it's what everyone's watching. When people say the markets are up today, the markets are down today, this is basically what people are referring to, and it's made up of it's made up of 30 companies, and here are those 30 companies. Okay, a pretty decent variety of different plays. There's kind of some tech plays in there. There's some financials in there. There's some consumers in there. There's some energy plays. There's banks and things like that. So it has a decent mix, okay, of different names. But the Dow is really what everyone is watching, okay? Now to put into perspective, this is a 3-year chart, okay? And to kind of put into perspective, this is when the Trump election took place, okay, back in 2016, all right? So this is where this kind of gives you some insight to what's happening. Now let's dive a little bit closer into this chart here, okay? Now I've blocked out the top right portion of this chart for a reason, okay? Up until that black box is up until about the beginning of 2018, okay? And I want to try to help illustrate something for you, okay? Remember, this is where the Trump election was, to keep the time frames in perspective here. Well, look at that increase in volatility, okay? Take a look at this chart and then look what happens. Do you see that massive difference? This is the year 2018 of trading in a nutshell, okay? So there's the volatile markets. There it is all together. There's the regular markets, okay? I'm hoping that this is kind of illustrating to you guys how crazy these markets have been and how different they've been this past year, okay? Now, volatility, if we're day traders, we often look at that and say that's a great thing. We want volatility, and this is true. There's a difference of volatility and total unpredictability, okay? And we're seeing that as many hedge funds, many day traders are blowing up accounts, many people are losing a ton of money in these markets trying to get an edge in these markets. And the truth, there really isn't much edge to be had, especially if you carry a long or short bias, because these markets, I mean, just guys, look at these markets. Look what the Dow is doing here. Okay, each one of these candles represents a week. 2 massive weeks of sell-off, 2 green weeks sell-off. I mean, these are huge swings in volatility. Here we got a tiny bit of stability there, and we actually got new all-time highs. But then look what's happened since. The volatility's increased even worse. Okay, it's insane. The volatility we are seeing is insane. Okay. Now, what I want to talk about next is to give you a little bit better idea of other sectors that are also being volatile. This is oil. Okay, this is a futures contract CL for WTI oil. I'm not going to get into the details of that, but basically, to keep this real simple, this is oil. Okay, well, look at oil and how that has traded in the last year. Remember this white dotted line. Okay, this is the start here of 2018. Okay, everything to the right of this is 2018. Look how rangy that's traded this year. I mean, in 2017, it traded in a much tighter range here. You know, I mean, oil is trading between $42 and $58 a barrel. Now it's trading between $50 and nearly $80 a barrel. Okay, it's all over the place. Longs and shorts, everyone trying to trade this energy sector. With everything that's going on in our economy and in the political landscape right now, it's all over the place. Let's dive in. As I mentioned, this was crude oil. Again, keep that perspective in there. That's about when the Trump election happened. Okay, I'm trying to keep everything in perspective. Look at this difference. There's crude oil during 2016, 2017. Oh, hello, 2018. Okay, massive increase in volatility. All right. I mean, oil is working on, basically 2 straight months of just in pure red. And we'll see how it finishes out this week. But anyways, just increased trying to illustrate. This is Netflix, okay? And I bring this up because this is a tech play, and the tech sector has been, as I mentioned, a huge market leader in recent years, okay? Well, look how tech has reacted recently, okay? This is 2016, 2017, very conservative. I mean, Netflix's, biggest volatility was between 185 and about 150. That's $35 of volatility. Okay, look at the volatility we're seeing here. Highs over 420. The beginning of the year started at 200. I mean, that's a 100% run in a year. Now it's already pulled back, 25, 30% off of its highs. The volatility is just insane. Okay, again, this is, that's not supposed to be there. Excuse that. That's from the other slide. But again, this is the Trump election to keep everything in perspective. I just want you guys to visualize this. Take a look at the difference. There's Netflix between 2016 2017. Drawbacks, volatility were all really quite minimal. Okay, your risk was all very quite limited. These were strong, safe plays and holds. Well, take a look at it. Sorry, I skipped it. Take a look at it here. Look at that difference. It's huge. It's this very significant difference in volatility, and it's crushing people to the long and to the short side. Okay. Next up, I want to talk about Apple. Okay, this is a tech play here. Again. Excuse that, it's not supposed to be there, my apologies. But this is another tech play, very similar to Netflix, very, very similar chart to Netflix. Apple was the largest market cap company in the United States on the stock exchange, was over $1 trillion. It was the first company to hit over $1 trillion. It's definitely not anymore as it has pulled back the way it has. But, this is a company that should just be a solid rock and foundation. And yet look at this volatility from highs of up at, 235 all the way to recent lows of 170, okay? Longs were sure feeling good and cruising here, and then they probably, you just never know in these markets, okay? Look at this nasty pullback, all right? People trying to predict where the bottom is. People probably thought bottom was here, the 205 area after they released earnings. Well, it's dropped another $40 since then, okay? These are big money plays, okay? Now, again, just to help illustrate, there's Apple 2016, 2017, boom, 2018. It's a whole different ballgame we're playing with, okay? So, speaking of market uncertainty here, I want to talk a little bit about how markets are reacting to news. Okay, this was the market 2 days ago. You'll see this highlighted area. This was the market 2 days ago when Chairman Powell came out and he made some dovish comments about potentially not raising interest rates as aggressively as he initially was planning, which many people argued to lead to the sell-off in recent months. Well, look what happened to market. Gigantic spike. I mean, we're talking a 2.5% spike, I believe, if I'm not mistaken, on markets after those comments were made into close. That's huge. That's huge. Markets went from being red on the year to green on the year in this single day. They were down heavily, and a 2.5% swing is just massive, okay? So news comes out midday. Look what happens. Look, the downtrend is very negative. It's a bearish day. Shorts were having a heyday, thinking, finally, I got a little bit of a groove in this markets. Nope, look at what this news does. Boom. Any shorts just got absolutely crushed. Now I bring this up because I want to show you what happened a couple weeks ago. Do you see this little gray area right here? Almost identical news was released about 2 weeks ago here as it was here. Okay, Chairman Powell came out and said some dovish remarks as well. There was an initial spike, but look what happened. No one cared after that. It sold off badly. You know what else happened? President Trump came out and said that he had a lunch with President Xi of China at this almost exact same time as well. And look what happens. The news is not reacting the same here and here. Even though this news arguably was potentially better news, the fact that there was trade news and news with Chairman Powell about interest rates and things. Okay, so the way markets are reacting to news is totally unpredictable. Why did this not move and hold like this did? Look at this move. This was a 2.5% move in our markets. Massive, massive move. Well, almost like I said, very similar news came out, and look what ends up happening. You know, markets sell off like 3-4% from these areas or so. It's just crazy. These markets don't know how to react to news. Traders don't know how to react to news. Volatility is the only thing we can be certain of. It's kind of like that cheesy comment that the only thing that's constant in this world is change, or however the saying goes. So what does this mean for traders? Are we all just screwed? Hedge funds are blowing up. Markets don't know what to do. Longs and shorts are getting crushed. People are losing in their retirement fund. Markets are basically, teetering, being down for the year. What does that mean? Interest rates are rising. It's going to be harder to borrow money. Are we all just screwed? No. Okay, especially as day traders, it does not mean that at all. Okay, and I've had some extremely successful days in these markets, but it's days like today that remind me one thing. And that one thing is that price is king, and we have to remember that. We have to trade the price action. Okay, when markets are just completely bozo and wacko and just out of control like they are, we need to put an extra emphasis on technicals. Okay, and I'll explain what I mean by that. Okay. But in terms of fundamentals and things like that, if you're trying to buy the fundamentals of our economy or the fundamentals of the trade war and what that's going to mean for our economy, or the fundamentals of interest rates, markets don't even know how to price that in. They really don't, okay? Because, Chairman Powell could announce that they're not going to raise interest rates, but then he says they're not raising interest rates because he's worried about our economy's strength. Those are two totally combating things. Like, no one knows. Really, we just don't know. It's that we have to wait and see. We can make guesses, and every day you turn on the news, people are constantly making guesses of what's going to happen, but we don't know, okay? And that's why we have to focus on price action, and I did not do that today, and I gave up a week's worth of profits in one single day, and I'm very frustrated with myself, but it's a great reminder about why price is king, and we need to constantly remind ourselves that, okay? Now, before I talk a little bit more specifically about this, I want to talk about catalysts, starting off with our negative catalyst, okay? Now, a catalyst is an event that causes a stock's price action to push in a specific direction. Okay, there's negative catalyst and there's positive catalyst. So, if a stock is down badly on the day, it likely has something causing that. Whether it's an earnings miss, maybe the company came out and said they're not going to hit sales when we call that lowered guidance. Maybe it's a biotech company and FDA denied their drug. Maybe they're doing an offering, there's dilution. Maybe an analyst downgrades. Maybe they have legal issues. All kinds of catalysts. Those are just an example of a few of them. We have some positive catalysts, okay? We have earnings winners, positive FDA news, contract news, share buyback, raise guidance, analyst upgrades, buyout rumors, okay? These are typically positive catalysts, and on the right, they're typically negative catalysts. Well, in recent markets, you can almost just toss this out the window, okay? We have stocks that have terrible earnings miss, lowered guidance, all sorts of things, and the stock spikes 10% today. And that's what caught me today. I got caught badly on one of those. On the other hand, we have a strong earnings winner, raised guidance, company released positive FDA news. People sell it because they're terrified of an offering coming. Contract news, share buyback. Everything is mixed. And these catalysts, which typically, are positive, they're not reacting like they typically do, and that's because of the market uncertainty. No one knows what to do in these markets. Okay, it's so much of a wait and see game. And I'm talking about more specifically about what I mean by that. And when you get catalysts acting in weird ways, once again, you have to focus on price action, and price action being king, okay? So here's my first example, okay? This is DLTR Dollar Tree, and I'm going to remember this trade today for a very long time, and it cost me about $10,000, okay? This trade alone, I gave up a huge $6,000 yesterday and previous profits from the week before. I'm okay, I'm fine, my head's still above water, but it's always frustrating when you have bad trades like this, and it's really important that we break it down. I want to talk about what's happening. So this is DLTR, okay? They had a bad earnings miss. Their earnings were ugly, okay? And in addition to that, they lowered their guidance, meaning they didn't think they were going to do as well in the coming quarters and coming years, okay? Guidance is huge, and it typically is way more important than sales and revenue, what the company does with guidance. If they lower it, very negative, typically, okay? I say typically. All right, look what happens initially. Early morning, crazy early, stock just gets absolutely destroyed, has a super volatile bounce back to the upside, sells off again. Okay. Well, I'm watching the stock here at this price range, and I am begging for an entry here near the $80 area, as this is an area where it basically got denied at previously, scoop, curl. I was just begging for a pre-market entry at $81. I've traded this exact pattern probably 1,000 times and won 975 of these. Okay. Okay. Very, very similar. That's not a joke. Seriously, it's like a 95, 97% win rate on this pattern. Okay, so I was stoked. Terrible earnings, any pre-market bounce, I was going to jump all over it and be super excited about. Well, what did I do? I got stubborn. Let's take a look at how this plays out. I was so confident in this trade. I told everyone that this should not see above $82. You know, I said $82 is my mental stop. I was in at like around $81. Okay, said mental stop's gonna be $82. It shouldn't be an issue. I'm not even worried about it. Well, guess what happens as we head into market open? Stock spikes. Stock spikes all the way up to $86 within minutes. And I'm so stubborn. Okay, I'm so stubborn, and I was so confident in this trade plan that what do? I throw this price action out the window. I said this price action's fake. This doesn't matter. This isn't solid. This is gonna give up. I did everything that you're not supposed to do as a trader, and look how this play develops. And I refused to give up on this thing. And I hung on this thing. This thing just continued to kill me all day long. Ended up losing 10 grand on the trade because I refused to cover. Okay? And look what happens. It just grinded. It made no sense for it to grind like that, in my personal opinion. Bad earnings miss. The stock jumps up, 5% off of bad earnings and lowered guidance. That doesn't make any sense. No, it doesn't at all. But it doesn't matter because these markets don't make sense. Nothing needs to make sense, okay? I should have taken my stop out here at $82 and moved on. Who cares? Am I going to be wrong sometimes? Absolutely. In fact, I honestly encourage being wrong because it helps me be better and try to be better moving forward. There's nothing wrong with being wrong and taking a losing trade as long as you have your stop losses, as long as you have a hard stop and respect that stop, as long as you are respecting price action. I had absolutely no concern for price action on this. Everything about this, it kept an uptrend literally all day. There was like some minor downtrends here. I really thought I was going to get my breakdown here under 86. No, this is super critical level, $86. I thought I was going to be, sitting perfect and we were going to get this continued sell-off, but it didn't. It didn't happen. And when that doesn't happen, it doesn't matter. I can't justify, I can't say this, that, I can't. The fact is the price went up. Price went up. I lost money on it. I should have been safer. I should have respected the price action. Price is king, and we have to respect that. I should have been stopped out of this in pre-market as it broke over 82, but I was so stubborn. I was so confident in this trade, and I just can't do that in these market conditions. These market conditions, you absolutely cannot do that, okay? So definitely ended up hurting me badly, okay? That was the DLTR trade. All right, next trade I want to talk about is Box, okay? Now this trade I ended up being fine on. I lost a couple $100 on, not a big deal, but I traded it terribly. I traded it so terribly because I did everything that I just explained to you in that DLTR trade. And these are two trades that had opposite catalysts. DLTR had a negative catalyst. I was short. Box had a positive catalyst. I was long. And watch how these play out. But before I get into how these play out, take a look at this was a watch list play that I wrote up the night before. I said I'm dip buying this at 1880, okay? And very confident that that's where the wedge breakout, confirmed wedge breakout we got in the after hours the day before was. I really like this dip buy area. I loved the support at 1840 to base my trade off, as you see here, and wanted my hard stop right there under 1840. Boom, trade plan set, everything great, clean, perfect. I know exactly what's happening. I know exactly where I want to get in. I know exactly where I want to get out. I know exactly where I want to take profits. It doesn't get better than this. I made this, 12 hours before this trade even popped up, then to the following day, okay? Well, let's go ahead and take a look at how stubborn I was as I let this run away. Now, a big part of why I was stubborn on this and didn't take my stop out was because of what was going on with DLTR. As I was getting crushed on DLTR, I let these emotions come in and I said, no, this isn't right. Everything's going to be okay. Everything's going to come back. And so I said, I don't need a stop loss here. If this stock is volatile, I don't need a stop loss. So let's go ahead and take a look at what's happens here. I get my fill at 1880 in pre-market. Perfect, right along with the trade plan. I even said in the trade plan, if you look in the fine print here, that I'd be happy to take it in pre-market, the 1880. Perfect. Get my 1880 fill in pre-market. Look what happens immediately out of the gate. Boom. I hits my stop loss within 3 minutes. I didn't have my hard stop in. Okay. I'm thinking this thing is so overly volatile. We see this so much. I was just justifying. Okay. I was ignoring price action. Remember I said price is king? I was treating it like a servant or a peasant. I said this price action does not matter because I am so stubborn. I'm so confident that this and this catalyst and those revenues, those sales, the raised guidance. I mean, everything about the catalyst was begging to be bullish today. The begging for this to run up over $20 would be a huge win. And I was feeling fortunate to have gotten the 1880 fill. I honestly felt lucky. Okay. Well, let's go ahead and continue to watch what happens. Stock immediately falls under my stop loss, continues to fall all the way down to $17, and I held through all of it. I was down as much as $1,500 or so on this trade. Ends up coming back a bit, and I get out near my stop around 1830 or so, which was where my original stop was. But it just doesn't make any sense. Why would I hold on to this loser? Why would I ignore my trade plan when price action is completely going against me? Is it because I'm afraid of getting stopped out and then the price, after hitting my stop out, immediately bouncing upwards? Yes, that's probably exactly why I was, but it doesn't matter. I can't have those prejudices. I have to honor my stop losses. We all have to honor stop losses because these markets don't make sense right now. And that's fine. They don't have to make sense. Honestly, markets, I mean, they most oftentimes will make more sense than they are in recent months, but they'll never make perfect sense. We'll never understand exactly why something's doing the thing it is. We have to respect price action, though, because that's the only really, I mean, I say tangible, I guess it's not technically tangible, but it's the closest thing we have to being tangible in these markets is price action. It's happening before our eyes. We're seeing it play out before us. Okay, these are two trades that I just totally threw away price action. I ignored it. It ended up costing me huge money. So real quick, I just want to do a little summary here. Okay, the less certain the markets, the more we want to rely on price action. Let me repeat that. The less certain the markets, the more we want to rely on price action. Okay, if it's 2017 and it's just a raging bull market, you buy anything and that thing's going up, it's a different story. You can buy dips heavier. You can ignore price action sometimes and be confident in 2 weeks it's going to jump another $10. Okay, they're different market conditions. Recent market conditions are uncertain. You have to rely on price action. Now, volatility, I showed a lot of those screens of volatility in markets. You might say, wow, that's great. There's so many. You could short here and buy here and short there and sell there and cover here and buy there and make so much money. La, la, la. Okay, that's a great idea, and that's the goal. That's the goal for all of us, to profit off of volatility. But with the gigantic flips of biased and bullish and bearish sentiment that we're having in these markets, it is absolutely destroying both longs and shorts, especially if they ignore price action like I did today. Okay? Volatility, as I mentioned, there have been so many funds that have been blown up in recent weeks and recent months because of this volatility and with the inability to manage it. Just like I demonstrated today, my inability to manage the volatility of these stocks that weren't doing what I expected them to do. Okay. Next thing, create trade plans and respect your trade plans. I created the perfect trade plan for Box. If I would have just taken my original stop out, I would have lost $200 or something like that. Fine, move on. Instead, I held through all the way to a $1,500 loss and it come back to me. I didn't deserve for that stock to come back to me. Honestly, I almost wish I would have taken the full $1,500 loss so that it would have stung more and I could learn my lesson better. I've learned this lesson 1,000 times, but as traders, we will learn and relearn our lessons, okay, until we adjust and make the great switches. We all need a reminder at times. All right, now, next thing I mentioned this earlier, no one knows what these markets are going to do. If you talk to a different analyst, he'll tell you, everyone will tell you something different. Ask me, I'll tell you something different. Ask your neighbor, they'll tell you something different. Well, guess what? Your neighbor who walks dogs for a living has just as good of a guess, honestly, of what markets are going to do over the next 6 months than I do. Okay, everything is up in the air. Don't get overconfident with your biases, with your long thesis, your short thesis, whatever it is. Stay agile. Stay agile, stay nimble. Be willing to move as price action tells you to move your positions. And keep it simple, okay? Everyone wants to talk about, this moving average is doing this, and the S&P pulled back to this Fibonacci level, and this Ichimoku cloud looks like a bunny rabbit or something. I don't know. Okay, everyone has some crazy reason, some crazy study to be doing something. The more uncertain the markets are, the less we need to rely on those. Okay, and that might sound backwards, and I'm sure there are a lot of traders that believe in me. We need to see things with our hands on the price action rather than with our eyes, because these market action, honestly, those studies can be very deceiving to our eyes. Okay, imagine walking into a room, all right, it's got a bunch of mirrors, you don't know what's an actual wall and what's not a wall, whatever. Okay, well, you close your eyes, you use your hands, you feel for the walls, you feel for the furniture. There's a chair, okay, there's a fridge, there's another wall here. You can slowly, it's slower, but you slowly use your hands to kind of see, what's around. You open your eyes, there's 1,000 mirrors pointing in different directions. You don't know what is where. You're gonna run into something. Okay, that's kind of how I want to use. That's kind of the analogy I want to use with these markets. Okay, so please keep it simple. Okay, use price action. Using price action is equivalent to walking in and using your hands to see where the door is and slowly feeling things out and slowly finding something that's going to work for you. If you overtrade, if you overanalyze, if you overread into this study and the moving average and like the bunny rabbit Ichimoku cloud, that's not actually a thing, but I'm gonna start saying that more often. If you try to overanalyze these things, you're gonna blow up. Like all these hedge funds, like all these traders are doing. We have to keep it simple. Okay. Next thing is news is only as relevant as traders make it. As I gave you that example of two very similar instances where almost identical news was released and they had very opposite reactions. Same news, opposite reactions. Explain that. I can't. I can't explain it. That's why we have to trade price action. Please respect all of our stocks, okay? All right, there is my big kind of preaching moment for the day. I really hope that you can take away something from this. These markets are crazy, okay? You're going to win trades, you're going to lose trades. Do not get down on yourself. Manage risk, and you're going to manage that risk by always having a hard stop and create a trade plan before every trade you take. And I have so many videos about that, creating trade plans and how you should. Please watch my risk management video. Please, please, please. I'm going to watch it about 10 times tonight so I can remind myself how to manage my risk, which I did not do at all today. Please watch this video. Stick with that, okay? Don't overcomplicate things, okay? All right, we're all on the same team. We're all traders, okay? We're all trying to do the same thing. We're all trying to beat these markets, okay? I genuinely wish the best for you. I don't even know who you are potentially watching this video. I don't care. I want you to win. I want you to succeed, okay? And I'm trying to give out as much information as I can of being a trader, for so many years, of how I can try to best help others, because these are markets that we just have not seen before. They're so different, they're so unique. And one thing I've been referring to a lot is that if we can survive these markets, it's going to be a huge, it's like we're going to Harvard, okay? It's like we're taking 4 years of Harvard college, okay, within 3 months. Think how hard that would be in real life. Well, that's kind of what we're doing. And if we can absorb and soak up all this information that the markets are teaching us and giving us, all these charts, all these patterns, these reactions, we just need to be like a sponge and absorb it, and it will pay off tremendously in coming months and coming years, the rest of your trading career, which I hope goes on for the next 300 years. I hope you trade forever, never blow up an account, and find the financial freedom that you succeed, because that's all our goal. Our goal is to live better lives, and trading is to help us, is the tool that we're using to do that, okay? I love you guys. I really do love fellow traders. I really do. Your success means a lot to me. It's important to me. So best of luck trading. Please keep it safe. Please be smart. Hope to see you in the trading room tomorrow morning.